After 3 weeks, I am back as we're heading into week 33. Before going on my trip, I told you that when I get back, I hope to see NIO around $5. NIO currently sitting at $4.84. Means that the $1,000 challenge where I try to grow $1,000 as fast as I can is sitting at $3,407. And I believe we will see the $4,000 being broken this week. And if you want to know all about this, you have to stay tuned, as I will tell you more at the end of the podcast. And you have to remember to subscribe and like. And you, my friend, you are listening to the economists.us podcast Trading Tips with Jim, heading into week 33. And during the week, there will be a lot of huge quarter results. There will be other important numbers, but maybe Friday is the day that you should watch out for. Everything I see in the chart indicate what I've been saying for a long time. I believe we are heading for a glorious decade in the stock market, but things can happen. And if you look at last week, we can tell that Nasdaq was up 3.87% and Dow Jones 1.35%, S&P 500 up 2.42%, Nasdaq pushing at new records. And the road to 2,000 to 25,000 points is, in my opinion, short. Only 17% buy signals in Nasdaq indicate there is more room at the Nasdaq index to grow, and I think a lot of the smaller companies now will enjoy it. Anyway, things can happen, and I already warned you, Friday is maybe, in my opinion, the biggest day, because on Friday Putin and Trump will talk. Later they will invite Zelensky about how to solve the Ukraine war. Big powers are playing against peace. We know that the war industry for sure do not want any peace. They are producing as much as they can and want to continue in that road. The same goes with a lot of influential people, which either are invested heavily into the war industry or otherwise related to it. On top of this, we have countries which also rather see this fail. For political reasons, internal political reasons, etc. They want any peace talks to fail and keep the focus on the war. If we see progress in peace talks, it will argue much more for the 10 years of prosperity which I have been claiming will come and is rolling up as we speak. And if it doesn't, if these things go sour, the peace talks go sour, I think that we might go back to bad periods, and I might go into gold again. Anyone following this podcast, and it's been going on now for the 6th year, know that I invested into gold when gold was $1,600 per ounce. I sold out at 2,950 because I thought the dollar would weaken. I also needed the money to go in to buy more of Nvidia and more of Tesla. I bought Nvidia at $82, Nvidia heading towards $200. I think Nvidia will break $200 maybe already this week. So I took one investment which I really wanted to hold because I saw huge and bigger opportunities in the stock market when the tariff trades were raging and everyone was scared overselling their stocks. It was a sound good choice back then. Doesn't mean that I will not go back into gold. Gold pushing towards $3,500 per ounce, which was my original target where I wanted to go out. Given the euro being the dollar being a little bit weak against the euro, makes for my $2,900 still exit still to be something valid, because I was out when the dollar was 105 against the euro. Now it's weakened quite a bit. So personally, I will do as follow. If Friday and the weekend doesn't turn into anything good, I will slowly maybe go back to gold again, start to reduce my stock exposure and go into gold. If talks are neutral or good, I will remain a bit strong in the markets, because all I see says that the markets will continue upwards. There is only 17% buy signals in Nasdaq, and Nasdaq shows all signs of continue within the strong upwards trend. And until we see some very high buy numbers, signals or other indicators, momentum indicators getting too high, it simply shows that it will continue upwards. And interest rates, if Powell didn't want to cut interest rates, he might be squeezed into the corner with the revised job numbers coming in lower than expected. He probably will be forced, and half of the Fed team is arguing for lowering interest rates, but being held back by Powell, but he will have to do it. And my former claim of 4 cuts this year, hopefully it will happen, but it's only 4 months left, we will see, but my original target was 4 interest rate cuts in 2025. When interest rates are cut, there is less money to be made in fixed interest assets, meaning that more money will flow into the stock market. So lower interest rates is usually good for stock market. Inflation is another thing, and inflation is high. That argues why Fed can keep interest rates high, and now everyone argues that the tariff, they will now, finally, they've been saying this now for, 6 months or whatever they've been saying, that these things will cause havoc in the prices. Hasn't happened yet, but they are more sure than ever that it will happen. And I'm not sure at all that it will happen. But Tuesday, first, we will have consumer price index numbers. They are expected to grow 0.2% in July to 2.8% year over year. On Thursday, we will have the producers' inflation numbers, the PPI numbers, which also expected to go 0.2% over the month, July, and 2.5% year over year. If interest rates are to stay at current level, we have to see inflation go up. There has to be a good, solid argument for it. And everyone argues, as I said, tariffs will do it, Trump will ruin the economy. So far has not happened. And if we look at energy, and I told you this over and over again, when everyone was screaming in January, I said it will not happen because energy was falling from the 80s, oil especially from the 80s down to the 60s. Oil currently sitting at $63, and I think oil will continue down to the $40 mark. And for every step downwards, everything gets a little cheaper. So even if tariff adds a cost to the end user, the producing cost of things will get less. Anyone that filled the gas tank lately have seen that things are slowly getting better. And if energy, and we know that Trump has been pushing hard to increase the energy output, if energy continues outward, it will stimulate all sorts of aspects of the economy, already are. And I think that we will just see more growth in Europe and more growth in Asia, more growth in US. For everyone except oil companies, it will be welcome news. That is an argument why I actually went out of oil companies. I was heavily invested into oil companies over the last 4 years. Golden oil was some of my favorites. I went out of oil because I saw different politics being the alternative. If Trump was winning the election, I saw a different kind of world. So I adjusted all my portfolios accordingly, and it has been such a nice ride since. The long lines, they are the things that will help you the most if you try to understand what are the long lines and invest accordingly and adjust in short term. And during the week there will be a lot of short term things coming up. It will be out of quarter results. Here are some of them. And while remembering, one of the numbers that is highly correlated to the movements in the stock market is the 10-year Treasury yield, which been falling, currently sitting at 4.28. Good news for the market. But quarter results are shaping the market, and this week I just had a quick look of some of the companies that is releasing this week, and the one thing they had in common is that many of them are expected to swing a lot, meaning that if you get the bet correct, you can stand to make a lot of money, and you can just expect, if you are sitting in one of the stocks, that they will they will have very strong volatility related to the presentation of the quarter results before and after. One company coming up today is Big Bear AI, and I wrote a small thing in the newsletter about this last week. I don't remember if it was Tuesday, Wednesday, or Thursday last week, where I said that maybe there is an upside in Big Bear going for all-time high. But I said the quarter results is when it will happen, and it will happen today, the quarter results for Big Bear. The swing on the stock, up or down, is expected to be minimum 10%. The consensus is that Big Bear will lose more money. Big Bear is heavily involved into government and defense contracts. They have got a lot of contracts lately. That is why the stock price is pushing a little higher, and I'm not sure that the earnings will matter so much for the stock market unless they are really bad, meaning that even if the earnings come in a little worse than expected, I still think Big Bear will push upwards. And if they come in better than expected, just expect huge movements. I think my newsletter wrote that there might be a 50% upside in Big Bear. You will know today, and next week I will tell you what happened, but in all fairness, it's a chance. Just so that being said, I'm not invested into Big Bear. When I was looking at things today, I remember that I forgot to buy on Friday. I'm not sure if I will buy today, but in my opinion, Big Bear, interesting. Just expect big swings. Oklo will also have numbers today expected to swing also 10%. And then is Plug Power, another company which I like. They're expecting to reducing their losses from 36 cents per share to 15 cents per share, and the expected swing is minimum 11%. A lot of people lost money in Plug Power, but doesn't mean that the game is over. It might mean that there is a good opportunity right now. Tomorrow will be more interesting. Another AI company is coming. It's Pony, Rigetti will come, Kava will come, and Tencent Music. Also Tencent Music is expected to move close to 10%. They are expected to increase their earnings from 15 cents per share to 19 cents per share. Plug Power, by the way, is mainly into hydrogen fuel cell technology, and they have been suffering a little bit. But with focus moving a little bit away from EV, might be time for Plug Power again. Tencent Music is interesting. They are growing numbers of paying users for the streaming. Also making more money on advertising is absolutely a stock which I like and think there is a huge potential upside in the swing, expected to be 10%. On Wednesday will be Cisco, and Cisco is not expected to deliver much big news. Increase in earnings by 12%, but the swing in Cisco is expected to be marginal. Thursday will be JD, Advanced Auto Parts and Applied Materials, and neither here is big swings expected. They are around 3 to 6%, all of them. Some of them are expected to reduce their earnings per share, but most analysts has been caught off guard with companies showing much better results than expected. From all the companies mentioning, Pony AI is the one that is expected to move the most, with almost 16% move on the quarter results tomorrow. So if you're looking for a high risk investment, short-term trade, not investment, I would call it a trade, you can try Pony and hope that you get the correction correct. And if you haven't liked and subscribed, do so. That enables this podcast to continue. So quarter results coming out this week. None of these are big enough to sway the market. There will be job numbers on Thursday, and they are expected to be on the little bit lower end. Friday, super interesting day with the Putin and the Trump talks, but they will have no effect on the market. I believe first next week will be interesting. So it will be that classic thing where Friday may end very strong, or markets in general may be very, very strong, and then we open up with a really bad red week next week, or it can be even greener. Hard to say. All I say that for the week ahead of us, I think that the markets will continue upwards, but Friday, I'm not sure I will sit fully invested. We just have to look what news are being pushed during the week, because now the cards will come to the surface. We will see who will play against peace, who will play towards peace, and just try to guess accordingly. Import and exports numbers will also come on Friday, and a lot of numbers are suggesting that the US economy is getting to a place where it might control the debt issue. And if the debt issue is being controlled, argues again for stronger upturn in the market. It argues for US maybe maintaining the economy and being number one, as BRICS countries are getting stronger and stronger. But so far and still everyone is betting on US. And I think if you're into Forex, I believe that the dollar is undervalued. I think the dollar will do at least 10% rebounds. Exactly when it will happen, I'm not sure. But it is currently undervalued. And the pricing suggests that they will not be able to handle the debt. But the debt was an issue 4 years ago. Now it's just more open news for political reasons. We are 16 minutes into the podcast. I will just give you a few more bits and pieces, and as I said, we will end the podcast with a $1,000 challenge, where I try to grow $1,000 as fast as I can. And everyone seems to love this thing where you show if you are good or not, and I do fully understand that. So far, I've been lucky. As I said, the $1,000 challenge is sitting at $3,407.64 to be exact. But I plan to grow this to 10,000, and if lucky, I will also grow it to 100,000. And that was one item which my followers, you listeners, was able to, at least some of you, was able to follow with $1,000 as a starting point. The buy and the sell signals, I already told you that Nasdaq is having 17% buy signals. It's a low on the very low end, and across all the boards, it's 38. It's not overbought at all. New York Stock Exchange 36, London 38, Oslo 39, Frankfurt 34. These are on the upper end, but none are critical, and lots on the chart shows that we had a slight correction. Didn't fall much at all, and then bouncing up, and Frankfurt 34, National Stock Exchange of 15, maybe one of the places where there seems to be an upside if you are at the risk edge. Right now, US and India is having huge discussions. India do not want to bend for the tariff rules and playing hard poker. This causes, of course, unrest in the stock market. Usually I use these chances to go in, take some positions when they are hammered, as usually things normalize. I'm not sure yet if I will do it. It's also a little hard to get trading stocks from India. I had a huge nice upturns when I took Asian stocks earlier, especially Chinese stocks when China was hammered. I used the chance to do that. Anyone following the podcast know that one. I think there might be an upside in India. I will look into if I can get into it, or maybe even some index funds positioned in India. Maybe let it shake during the week and see then if it's a good entry level. Tokyo 53% and Shenzhen, China 56% buy signals. And if you're a little confused, wondering what does these numbers mean from a scale from 0 to 100, if we get into oversold numbers being way too low, you normally have a correction up. If these numbers are way too high, meaning there is too much buy signals, people are simply too over optimistic, you usually see a downturn in the market. And it's been correct as long as we've been following this. It might miss 1 or 2 weeks, but in general it's a very correct. It's one of the tools which I use when I try to adjust how much will I have in the market at any current time. When the risk is way too high, I reduce my exposure. Yes, I lose on some of the stocks going high, but I reduce the risk, and I'm very, very comfortable by that. Most of you are chasing the impossible numbers, the huge numbers, the doubles, the triples, the quadruples, while you should be chasing the 5%ers, the 10%ers, which are reasonable to reach, and just redo. When you get one 5%er, you go for the next 5%er, and this way you continue and your portfolio grows with less risk. Left with the $1,000 challenge. Just a short revamp if you're a new listener. So I had several, over all this year, I had several portfolios, and I told you what I buy, what I sell, and we've been very lucky with that. Almost a year ago, I decided that, okay, I will do how I started my trading. Back when I started trading, I had something similar to $400, maybe a little less actually. That's how I started my trading so many years back in the early 90s. And I was able to grow that, and I always wanted to see if I could repeat what I did back then, go into stocks with high risk, but with some solid reasoning. I used a lot of oversold stocks, oversold on the relative strength index, doing bouncing backs. And doing so, I grew $1,000 up to $3,800 or $900. Then I got into NIO because I see huge upside in NIO. NIO is being way too hammered in my opinion. I've taken a huge gamble personally in this, way more than $1,000, maybe too much. We will see. So far it's been okay. I started to buy at little high numbers. I've been buying several times to get into the position where I want. I am almost there, but sitting with an average now, actually making slight money. But for a long time, I was in the red, but this is one position I believe in. Anyway, I got into the $1,000 challenging NIO at $5.10, just to see NIO go down to all the way to 360. Currently sitting at 484 and is pushing upwards, been twice pushing above 5 just to be hammered back. If I remember correctly, there is huge short position into NIO. NIO is very heavily shorted, but now pushing, and that can cause a short squeeze. Actually, my system says that it's 100% chance there will be a short squeeze in NIO, so it can go into a frantic rally. If it happens, it will take 23 days for the shorters to cover all their positions, meaning it can be a long run, just going up, being pushed upwards. The double is in sight. Not sure it will happen. We've been disappointed before. We've been waiting a long time. Maybe not you, but I've been waiting a long time to get into it. And in one of the videos at Stock Invest, where you can follow on our YouTube channel, you have this trading tip channel. Then we have a YouTube channel where we give I gave my comments on 10 stocks, which I believe will do good in Q3. And this was somewhat month or two back. And I see a lot of these actually are doing what I thought they would do, NIO being one of them. And NIO has promised to be profitable by Q4. Will it happen? I'm not sure. We will just watch and follow. But NIO still stays in the portfolio. And the portfolio, the $1,000 challenge, is sitting at $3,407. And knock, I believe when we will speak next week, it will be over $4,000. I think actually it will be over $4,000 before Wednesday. But we will see. Maybe I'm a little bit optimistic, but everything in the chart is indicating that NIO is getting out of the long falling trend. It's been pushing a horizontal trend for a long time now and showing the signs of breaking up into a longer trend. And I never know exactly when things turn. I just start to buy when markets are low. When markets were having the worst hammock in after COVID, I was doing the same thing. I didn't know where the market will turn. I just started to buy, and that way I got an average which was super good. I got in a little too early, and then just hit the bottom and bought a little too late, but with a super average. Did the same thing with the tariff things now. When the tariffs was too much and markets were falling too hard, I just started to buy because it was such a solid opportunity. I've been doing the same thing with NIO. I started to buy way too high, not knowing exactly when things will turn. It's called cost dollar averaging. It's one way of doing things, not going in fully at one time, but get in portions until you have filled the quota, which you had set. 25 minutes, time to say goodbye. Nice being back after 3 weeks. Last bits of news. Next podcast will not be out next Monday, but on Friday we will try for a short time to change from Monday to Fridays to give you the weekend to listen to the podcast. I wish you the very best of the week. I really hope that your portfolio will be much greener by the end of the week. Until next time, bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information you agree and are held liable for your own investment decisions.